Well, shares of T-Mobile have been under pressure since reporting third-quarter numbers. $500 million surge in capex is what's being pointed to as spooking some investors. Now, heading into the key holiday season, analysts are wondering if the sector is headed into a more competitive cycle. This coming as competitor Verizon announces major layoffs today under new management. But joining us now in an exclusive interview is new T-Mobile CEO Srini Gopalan. He started in the role just earlier this month, and it's great to have you on the show. Welcome.
It's great to be here, Morgan.
So let's start right there, because you announced some news today specifically about switching. And what got my attention here is the role that AI is going to play in that.
Yeah, absolutely. One of the biggest pain points in this industry has been just how complex and difficult it is to switch a provider. And what we announced today was really smashing that pain point and making switching easy. It's a combination of three things. It's kind of moving switching from 3 hours to 15 minutes. That's where AI plays a significant role. The second piece was really giving consumers control over their phone, making them decide when, how, and where they get their new phone. And third, and very excitingly, having same-day delivery with DoorDash. You put that all together, and one of the biggest consumer pain points, which is switching, has just become a lot easier.
So what are you seeing with consumers, especially as we're a week out from Thanksgiving and going into the all-important holiday season?
We're seeing solid, robust demand, including from our existing customers. But to be honest, Morgan, we're never going to be the canary in a coal mine of how the economy is doing, right? Because today we're such an essential product. We're not hugely sensitive one way or the other to economic news. We're seeing solid, robust consumer behavior.
Srini, what about fixed wireless? I mean, it seems like you've been taking some share there, but the fiber piece doesn't seem to be particularly strong. Is that based on what's happening in the macro and some caution out there? How would you frame it?
Look, our fixed wireless product has just been incredibly strong. We're now the nation's 5th largest ISP. Fiber is something we entered about halfway through this year, and we actually are growing incredibly quickly. We'll have close to 1 million customers by the end of the year just on fiber, and we've exceeded all of the consensus numbers on where we'd be on fiber. Fixed wireless access itself, we've got close to 8 million customers, incredible product that's growing really strongly and testament to the strength of our network. So broadband is a place we're really excited by because we have the opportunity to do what T-Mobile does best, go in and attack incumbents who are overpriced for an inferior product. So we're really excited about where broadband is. Not sure where you got the fiber slowing down from, but we aren't seeing that.
Okay, not at all. So where does that fit into the switching story? Are consumers and businesses taking the full bundles, taking these things together, or more inclined to do it separately?
The consumers make independent choices on their broadband and their wireless. Sometimes they may choose to bundle it, but sometimes they also choose to bundle phones, right? So like a family buys. Our switching focus is really on wireless. I mean, the problem is, look, today, taking a new wireless connection should be the start of a new relationship. It should be like a honeymoon period. Instead, it's like a long, messy divorce, because carriers force you to jump through all kinds of hoops, do all kinds of gymnastics to just move to a new wireless connection. And what we're focused on is smashing through that pain point using digital technology, using AI, and using same-day delivery. It's about taking friction out of wireless.
Quickly, Srini, I want to get your take on this idea that we're entering a new competitive cycle for wireless and for communications industry, especially on a day where Verizon is announcing more layoffs. We're seeing more restructurings, and even at T-Mobile, you've announced that you're going to be spending more this year.
So I'm not seeing a new competitive cycle. This industry has always been very competitive. Now, the nature of that competition changes. Sometimes it's on devices. Sometimes it's on rate plans. We're seeing a strong level of competition, which is really good for the customer. We also need to step back and look at how this industry has evolved over the last 3 years, right? Consumers have been better off, faster speeds, more data. At the same time, if you look across the different providers, you've seen a strong, almost 50% growth in free cash flow. So I think it's a solid, robust industry, which is competitive. Okay. And we love competitive, because the more competitive it is, the more jump balls there are.
Okay.